Good evening. This is Ken at Tortoise Capital with the daily quiz for February 7th, 2019. So today we're going to take a look at how I synthesize a trading plan. In this case, I'm looking at Dow DuPont, DWDP. Thanks, Missy. So what I've done is I've extracted portions of the daily report that pertain to DWDP, and I want to show you what I'm looking at. So we've got these 10 different elements to pull together this trading plan. So number one, I'm taking a look at my usual stack of suspects, organizing them by percent loss today because today was a selling day in the S&P. And I noticed that Alcoa, Schlumberger, U.S. Steel, Metals and Mining ETF, Dow, DuPont, Cleveland Cliffs Natural Resources, the XLB Material Sector, and then the S&P. So all of these underperformed the S&P, and the worst ones were near the top. So I see that DuPont is worse than the sector, not quite as bad as maybe Alcoa. Number two, I'm looking at the Dow summary, and DuPont is number one on my max pain range compression report. It has an auto framer risk to reward of 4.5 to 1, so I'm automatically interested on a swing basis here. I see that it has a green highlighted ATR percentage, meaning it's among the most volatile in the Dow, and that means that it's well suited for trading. I notice that its counterpart Caterpillar, kind of in that same sector, is also very volatile. On the price change, the fact that it's in the red for 1 day, 10 day, 1 month, 3 months, 6 months, and 12 months means that for the whole Dow components, it has been among the worst performers in every measured time frame. And in the NDX, on a 10-day and 1 month basis, it broke down to new lows today. So did McDonald's. But Caterpillar broke down on the 10-day. I'm sure that's Goldman Sachs. But Caterpillar has not. So Dow is just a little bit worse than Cat, and it has been exceptionally poor across the whole board. So that's of interest to me. It's really distinguishing itself by its underperformance. In the MACD histogram subset here, I notice it's in the fall, and that it is fallen below its MACD histogram, Red River. It's among the most negative Z stretches in the combined universe of the Dow and the ETF 30. So it's 5.5% below its Bollinger Band mean, which is almost a full standard deviation below. On the auto framer extract, it's got more than 2 ATRs from the RL10 to the RL270, so it is quite an extreme move, long-term fair value versus the true trader's price. That's measured up. You can see on the daily chart here that's that distance. That's more than 2 ATRs. Number 6 is now 6, 7, 8, 9, 10 are this monthly time frame lens that we've been using, and I've marked up the charts for. On the monthly, the green line and the red line would be the automatic mechanical entries, long or short, because you can see that I've marked up some reasonable targets on a monthly basis. 3-month high, the RL30 and the top of the dragon, and then above the RL90. Those all look like reasonable upside targets within this whole noise range here of the last year. And all these are carried forward. The green and red lines are carried forward. So on a weekly basis, it's 2 weeks down, maybe stabilizing. I don't know. These inner red and green lines are now the weekly mechanical frame entries. Still below the Bollinger Band mean, below its 200 period moving average, and long-term fair value all the way up in here. On the daily frame, zoom in a little more. Now the daily mechanical entries, and then these are the ones that are inherited from the weekly and the monthly, and a reasonable target back up here to the just above the MACD histogram and Z2 to the upside, and then plenty of reasons to believe in the downside fail if it continues to fail. And you can see the MACD histogram, we've gone under the 0 line here and just into the fall. On the 2 hour, there was a gap down and then a sell, rebound that didn't quite make it back, and then another fail, and then an orderly close in the afternoon after one big final push in the morning. Then the last 6 hours were kind of stable and flat. On a 30-minute chart, you can see how that this is 1, 2, 3, 4, 5, 6 days. That today's price action sold off sharply, but then closed very well, as if maybe that selling was done, and makes the argument that there might be a swing low here. And so I've put in a mechanical frame here. That's the one inherited from the daily. This would be the mechanical entry for the day, based on the high of the day, and mechanical short based on today's price action, high and low. So there's a lot of reasons to be interested in this. If it opens inside this yellow zone, I will take the play in either direction. It's 4.5 ATR, or 4.5 daily ranges back up to the 10-day high, but plenty of reasons to believe in the downside. So lots of good reasons to be interested in the Dow or Dow DuPont. So I will be watching XME, XLB, and the market itself, along with its peer of Caterpillar and probably Cliff Natural Resources, to see if there's any play in those targets in that sector and in the market. And I'll use that to guide the directionality, and I've marked off the prices that are of interest, both on an intraday and then on a swing basis. So thanks for your kind attention. This is Ken at Tortoise Capital. Keep your risk measured and your powder dry.